What is IPO? If you ever seen Movie and Market, then you listen the name of IPO.
Offering up our latest IPO.
What actually IPO is and how to invest in IPO. Today we will learn how to invest in IPO and how IPOs work, and which type of people invest in this market. When a company sells their share, it has to go publicly. This is what we call an initial public offering. It means that the company is going to expand. That company is private limited. Private limited companies can't sell your company's shares. It becomes a private company to a public company. This is what we call an initial public offering. When a company is going to expand, it can be in any way. It can be a multinational company or to build more factories, etc. To do all these things, companies need a lot of money, which they take from the public. In this case, companies give us a few shares. With the growth of the company, our share price also increases. I hope you have a good understanding of what is going on. Let's talk about who can invest in the IPO. The IPO can invest in three types of investors can invest. First of all, qualified institutional buyers, meaning big companies like insurance companies, mutual fund, and biggest corporationer. They have a priority because IPO for these companies already has 50% of shares reserved. After it comes the non-institutional buyer, that is, people who invest more than 2 lakhs. They have 15% shares reserved. Now it comes the retail investors, that is, the normal people who invest less than 2 lakhs. They have 35% reservation. How do you invest in an IPO? Let's take an example. We'll soon understand. We can't buy a share in any IPO. The share is bought lot-wise. What lot is it? When you go to buy an IPO, you can buy an IPO from any broker. You have heard the name of the broker, Angel One and Grow. You will be told that a lot of shares is a lot of shares. That means that a lot is 100 shares. There is an IPO, which is one share's price is 100 rupees. If you have a share price is the issue price, you will have to buy a lot at least. And a lot is 100 shares. You have to invest 10k rupees. Now the question comes, why do we invest so much money if our money is lost? There are two types of people in the market who invest money. One is a speculation and the other is an investor. Like a company's IPO is coming on 10 of October, and on 20 of October there is a IPO listing. That means after about 10 days. Remember, the IPO list has not been listed on NSE or BSE. Now what is NSE and BSE? NSE and BSE is our stock exchange. Now who had invested in the IPO that time? The IPO's issue price was 100 rupees. When the company gets listed, its price becomes 250-300 rupees. This is normally, per stock, 150% to 200% profit is only during the listing time. That means who had invested in the listing, it will only become 20,000 rupees. But the investors who are investors, let's look at the IPO history. You have to search for the IPO history. There is an IPO named Intero Health, which is not invested in a rupee. High network investors have 0.04% of people have invested, and retail individual investor has 0.49% of people have invested. IPO's issue price was only 1 rupees. When the company was listed, its price was 12.45. That means that only when the company was listed, people were per share 12.44. That means 114,850% profit. People had only earned it during the listing. First of all, the company is being launched after the stock exchange. What is the stock exchange? Let's look at it, we'll see. There are around 80 major stock exchanges in the world. But India have only 2 stock exchange. One is National Stock Exchange and one is Bombay Stock Exchange. A stock exchange, securities exchange or bourse, is an exchange where stockbrokers and traders can buy and sell securities such as shares of stock, bonds, and other financial instruments.